While most investors in the market are focused on AI stocks, Netflix has been on the rise. We have Jared Levy, the chief market strategist at Peak American Financial Group, standing by. Jared, Netflix is closing in on $600 per share. What do you think is ahead?
Yeah, it's kind of one of those deals, right, where, Netflix was a darling, and then it kind of fell by the wayside. And like you said, Angie, there's been all this talk about AI and obviously the Magnificent Seven, which, Netflix sometimes gets put into that. But anyway, the bottom line is this stock has really done a good job at reinventing itself. They've cracked down on passwords. They're really focusing on content. And, I know the streamers are kind of not loved by a lot of traders, but they just had this blowout quarter of earnings. And remember, it's getting back to the best content, the people that own the best content, that produce it. And Netflix is still the best in breed. All right, here's a stock at, $585, $590. They had a $9.4 billion first quarter revenue number. I mean, it's huge. They blew away analyst consensus expectations, and the stock was off a little bit. The bottom line is this. I think that they formed a nice base here. I think that Netflix has really proven itself. They did caution. They kind of set expectations that things might not be perfect, and that's good. Investors they're okay with that. So I think expectations here are low, and that gives us the opportunity to step in, buy Netflix in this area, and hold it till about $620 a share.
Do you think, Jared, that investors underestimated the power of Netflix cracking down on people sharing passwords rather than paying for Netflix, and now they have to pay?
There's potentially, tens of millions, if not more, people out there that were password sharing. And don't forget, there is a global growth story that's still there. So you bring up some great points. I like that the company's tempered expectations here. The way I like it even more, if you're going to play this thing, the May 31st expiration, you can sell the 550, 540 put spread. You can bring in about $1.60 credit. Okay, that's the most you can make, but you only risk $8.40. And all the stock has to do is stay above 550. But like I said before, Ange, you can own this stock. I'm cool owning it here. It's going to be volatile. I'll tell you that. And I'd be a seller around the 620 to 630 mark.
Tell us again how you potentially make money on this stock.
Well, on the put spread, the stock just has to stay above 550. For me, if you're just an equity owner, the stock's got to get to that 620 level. So I think it can head there easily. The analysts, by the way, the average $667 is their target for the stock. And just about all of them are bullish to some extent. So that also makes me feel pretty good when the smart money's kind of lining up behind our trade.
Thank you for sharing your smarts on our show.
Thanks, Angie.
Go to businessfirstam.com for where to see our show on TV.